We have to continue the discussion in a different way with Julian Emanuel. He is BTIG's Managing Director, Chief Equity and Derivative Strategist. And Julian, I had wanted to talk to you, and we will talk to you about, the dollar hit a new 2-year low just the other day. We're watching real negative rates impact the decisions we make with our investments. But we got to address this issue with China. I mean, what kind of impact, if any, is it having on the dollar and what's happening to fixed income?
Well, interestingly enough, and perhaps counterintuitively, you're seeing the dollar strengthen today. And that's for a number of reasons. But to think about China in and of itself, clearly, it's obviously a surprise, the collection of the initiatives that we've seen announced by the administration in the last 24 hours and the level of the hostility. But the fact that the hostility is rising into election day is not a surprise. And so from the fixed income perspective, well, the fixed income market has been unmoored from literally everything except the Fed for the last several months. That continues to be the case. Obviously, it was good to get better than expected numbers this morning from the employment report. But the bigger picture is that the absolute numbers, the degree of the stress in the system and the questioning of the economic recovery put it all into perspective that we still have a lot of work to be done.
Hey, Julian, it's Julie. It's good to see you. Those questions are not really reflected in stocks right now, are they? Turning away from fixed income for a second. Even with today's sort of tepid action, we have mostly seen a lot of momentum behind this rally. So what's going to change that, if anything? Or should it not change? I mean, our stock's priced appropriately right now.
Well, in our view, this summer has been a bit stronger than we would have expected. But if you think about, as Adam mentioned a few moments ago, the significance of negative real rates, it has been an incentive for a move into stocks. And, the other aspect of it, again, is the low absolute level of yields themselves, combined with the incredible preponderance of zero fee online trading, fractional share ownership, and an American population that has largely been at home over the summer. There's a lot of speculation among the public, and that, to a large extent, has been fueling a big part of this rally, particularly in the NASDAQ names.
Julian, I want to get back to the first point that Adam made, which is the tensions that we're seeing between the U.S. and China. In addition to these executive orders, we had the president, the White House, coming out and recommending stricter audits on U.S. listed Chinese companies. This is something that has been floated out before. The Senate's already passed a bill on this. But we've already started to see these companies, whether it is Alibaba or JD.com, start to list in Hong Kong as well. Now, that's still a secondary listing, but increasingly appears that this is actually going to go through in terms of the stricter scrutiny on these companies. Should there be a concern that there's going to be a mass exodus of these Chinese companies? Does that change the investment case into the U.S. at all? When you look at the broader market, it's still a smaller portion.
Well, as an international investor looking into the U.S., you are probably questioning, the capital flows, because first of all, when you think about the U.S., the markets here have been much stronger relative to the rest of the world. The valuations are much more extreme. And the fact of the matter is that when you're going to impose barriers to the free flow of capital, it definitely creates reverberations. And there's no question in our mind that, listing elsewhere is certainly going to be one of them. And again, along the lines of our expectation that tension with China is likely to continue rising, at least into the election, it's a trend that's set in motion and is likely to stay in motion.
Julian Emanuel is BTIG Managing Director and Chief Equity and Derivative Strategist. Good to see you, Julian. Be well.
Thank you.